Second thing we're going to do is I'm going to try to explain what happened over the last 2 years and what's happened over the last 24 hours, both politically and economically, and what the implications could look like, because it all flows right into the discount rate and then flows right into asset prices. So it's basically the presentation's political application to finance and valuation theory. Okay. And I've been working on this for about, about 7 years. And I would say the last 24 hours was really interesting to kind of pull it all together and kind of figure out what really happened and how it happened and what's going to happen in the future and what the future looks like. And then what you're going to do is you're going to pull out your memos and you're going to read the first top part of the memo, and I'm going to walk you through the articulation and the communication of the memos, because part of the process is not only to be able to write these trade briefs, but to be able to communicate them to clients, senior level managers, investment committee, board of directors, other individuals. Okay, so it's part of the oral component. And then what we'll do is we'll go through the last two problems on the exam, and you'll have that. And then we'll come back next week, and I will start the training on the evaluation process. You've already have examples of the presentations. Does anybody not have, is not in a team? Is there 3 people to every team? Does anybody not have a team? Everybody's in a team? Okay, good. You have 2 what? You have 2 people in a team? Yeah. Okay, so how many people have 2 people in a team? Okay, there. Oh, a lot of you. Okay, then you guys need to, somebody needs to go into the teams with 2 teams, because I can't do all that stuff, and then form teams of 3. And if there's 1 person left over, I'll throw you into another team. But you have to have teams of 3. You can't do it with teams of 2, you can't do it with 1, and you can't do it with 4. It's got to be 3. Okay, so I'll let you guys do that after the lecture, because that's what we were supposed to do last time. Okay, I'm not going to get involved in team formations. I mean, I can't deal with that psychology. So let's do the market updates. What's the Dow doing? What did it do? What's it done over the last 24 hours? Have you been tracking it?
It's up 1.04%.
Yeah, so what was it up, like 250% or 250 points? Last time I looked. Yeah, what did it do yesterday? What did it do at like 5 in the morning, 6 in the morning, when the polls were closed and we knew what the electoral outcomes occurred? Went down by how much? 800. Okay, and it hit the circuit breakers, and the circuit breakers basically stopped the sell-off occurring. And then where did it settle yesterday afternoon when the market closed? What was it up? It was up over 200 points. Okay, and it's up 250 points today. So the question is why? I mean, you're going to be investing in stocks, you're going to have 401ks, you're going to have money in the stock market, you're going to be exposed to it. So you probably want to start tracking it, because a lot of your wealth is probably going to be made up of equities. Okay. And you're going to want to know if you're better off or worse off. Tell me about the oil prices. By how much to what? 1.2%. 1.2% to what? That's like 43 bucks a barrel? $44 a barrel. Okay, so you've seen a sell-off in oil. Why would oil prices go down? What's the perception? Do we know what the policy outcomes are going to be yet by the new Bush administration, controlled by both the House and the Senate?
There's going to be more oil production.
Probably, yeah. He's already said that there's going to be more drilling, more production. Okay, and obviously the markets are taking that into consideration already. What about gold? Is it up or down? You remember, gold is a precautionary asset. People go into gold when they're scared or when they think inflation's emerging.
It's down 0.7%.
So it's down? Okay. Well, so people are obviously, or investors are selling off their gold and buying stocks. Right. What's happening to the 10-year Treasury yield? It's up to what?
2.09.
2.09. I think last time we were looking at it was 1.7. And after Brexit, it was like 1.5. So it's up over 50 basis points over the last 3 months. Is that a pretty big move in interest rates? Yeah. And why would interest rates be going up? I'll give you two reasons.
Prices are going down. Bond prices are going down.
Yeah, like, what?
Because people are buying them.
No, people don't, when people are buying bonds, the bond prices don't go down, they go up. So bond prices are going down, so people are selling bonds, why are they selling bonds? What? Because they can probably get a higher return in stocks, okay, that's correct. What else? Based on the Fisher equation.
They expect inflation to go
Yeah,
up
is inflation gonna be higher or lower?
higher.
Higher. Is that good for bonds? No. Yeah, and what would cause interest rates to go up? Higher inflation, but what does that also tell you? What does that tell you about the economy? What does that tell you about Fed policy? Is the Fed selling bonds or buying bonds? If interest rates are going up, is the Fed selling bonds or buying bonds? If interest rates are going up, is the Fed selling bonds or buying bonds? If interest rates are going up, I'm just gonna keep asking the question until I get the answer. If they're selling bonds, what happens to bond prices? They go down, and what happens to interest rates? They go up, so what's the Fed doing? Are they buying bonds or selling bonds? They're selling bonds. Okay, the Fed is selling bonds. Okay. So people are selling bonds to go into stock, okay, that's driving down bond prices, driving up interest rates, correct? Yes? Yes, okay. Inflation expectations are rising, that's gonna cause interest rates to go up and bond prices to go down. Is that correct? If inflation expectations are going up, do interest rates go up? Yes or no? Yes. If interest rates go up, do bond prices go down? Yes. Okay, good. Okay, so we're getting to the answers. Okay. And I'll get to the answers when I do the presentation. All right, what about currency? What's happening to the pound? Euro, ruble, peso, yen, won.
The euro's barely down,
It's what?
barely down,
Flat.
0.2%.
Yeah, it actually appreciated. There was a flight to safety into the euro. What else? What about the peso? By how much? Why would the peso depreciate against the dollar? Why would the peso depreciate against the dollar? No, it's a direct impact from the election outcomes.
The NAFTA with the Trump.
Exactly, he's gonna renegotiate NAFTA, and that's gonna have a negative impact on the Mexican economy, and the Mexican peso devalued 13% to the lowest level in 20 years, in one day. Is that gonna have a major impact on the economy? Absolutely. If you look across the spectrum of industries that will have positive policy outcomes, those stocks are up, some stocks are down. So it's having a major effect on the markets right now. What about the pound? Is it up or down?
It's up.
So it's appreciated. So again, flight to safety. What about the rand? You know, the South Korean rand, or the South African rand, or the South Korean currency. What about the yen? What about the ruble? Currencies have gone up and currencies are going down. There's a major shift going on in the currency markets based on policy outcomes.
The yen is appreciated.
Appreciated, so there's a flight into the Japanese yen. And if you look at the emerging market economies, they've been dumped because of global trade. Expectations of lower global trade due to renegotiations in NAFTA and the TPP. So major economic impacts are occurring right now in the marketplace over the last 24 hours. So the shift in the analysis has gone from finance and the economic analysis into political analysis that has a direct impact on the valuation of assets in your portfolio, the assets of your company, profitability of your company. There's a major shift going on in the political spectrum. We just saw a major realignment. We will see a major realignment in the political process. The Republican Party controls the executive branch, the House, and the Senate, and it has a shot at electing 3 Supreme Court judges in the next 4 years. Conservative. That will have a major impact on politics and economics. You saw a rightward shift in the political spectrum. You saw Trump emerge and basically come in and co-opt and mobilize basically the rural, white, non-educated, educated population with a landslide. Major, major shift in political outcome, and will rearrange the institutions of government and rearrange the institutions of the market. You are living through history right now. And there will be long-term implications. You'll live longer than I. I'll probably only be around maybe another 10, 20 years. You'll be around 40, 50 years. And you will see the impacts and the ramifications associated with this total realignment that's occurring right now. And the impetus of it was really originated from globalization, but the financial crisis. And nobody's ever really talked about the financial crisis and how it dislocated millions of individuals and basically put them into abject poverty that then 9 years later mobilized into a populist wave of a voter coalition to then elect somebody like Donald Trump into the presidency and then sweep the 2 houses. So this is a mandate for change. The old system power has basically been dislocated. And it will have an effect on the markets and the asset prices. So let's just kind of review what went on and what the implications are. And I'll walk you through it, and hopefully I won't take too long. But this was definitely the dirtiest campaign ever. From the outside, from the global perspective, the dirtiest, most toxic ever presidential election in history. It actually destroyed a lot of the credibility and the trust that the globe had in democratic capitalistic institutions that we were the model of for basically decades and decades, pre and post World War II. There was talk about illegitimacy and systematic corruption. There's sex scandals, lies, accusations of a rigged system, racism, attacks on certain demographic and socioeconomic groups during the campaign. Again, just never been done before. Institutional dislocation is what I can see. And even deconstruction and destruction of certain types of institutions that have been built up over the decades. And again, we don't know what the implications are. And the contest was in some cases a direct attack on moral and ethical behavior. You're having realignment. The reality is a realignment of legitimate and illegitimate power structures that are currently in place. Some will be circumvented, some will be replaced, some will be rearranged. There's going to be a renegotiation and a realignment. That will go on, and you really need to listen to what's going on, because this is really the reality. And then you have social outcry. We have protests that are occurring right now and continuing to occur over the last 24 hours. Never occurred before in presidential history, where you had basically social unrest after an election. Again, you're witnessing history. You witnessed the splintering of the Republican Party, but now you're seeing it come together again around the president, because now they control both houses and they got a shot at the Supreme Court. Okay, so you're going to see some fast track policies coming through that will be pushed through probably within the first 60 to 90 days of the administration. And I'll go through what the policies will look like and what policies will probably be attacked and dismantled and probably have to be replaced. This was a populist movement based on demographics, not based on party ideology, which was usually the norm over the decades. This was demographics, okay? And he obviously tapped right into frustration and an anger by demographic groups within the country and was able to mobilize them into a landslide. And again, and I'll admit it, we on the West Coast, we live in a bubble here. We live in a bubble. We have no freaking idea what goes on out there in the Midwest and other parts of the rural areas of the country. We were totally blind to the whole thing. I admit it, and I probably did a really bad job of really understanding what was going on. And their frustration was really lack of prosperity, economic fears, lack of jobs, and falling into poverty. The mobilization was blue collar, uneducated white males and rural women in particular. 60% of Republican voters are over the age of 50. 70% are white. 86% are 50 years old or older, white males, but 43% of the people who voted for Trump were college educated. Also, 27% were Hispanic, because they also were subjected to poverty. And they were really looking for a president to be able to come in and really address some of these dislocation issues, and fed right into the anger that was going on. The election was the biggest gender gap in American electoral history, not seen since the 1950s, and there will be definitely restrictions on abortions for women and their free right to choose. That was in the rhetoric. The millennials, the demographics under 35 years old, is the largest voter bloc and will become the largest voter bloc. You will become the most powerful generation next to the baby boomers as they age and leave the labor force and leave the electorate. And you can see, unfortunately, very low voter turnout from the millennials. And obviously he was trying to tap into it like Obama did by the use of social media, particularly Twitter. Low African American and Hispanic turnout. The numbers of African Americans participating in this election is significantly lower than Obama. Doesn't even come close. And actually 6 million people less actually participated in this election. This is the most polarized election ever in the last 25 years. And then you saw just psychoses, and pathologies and psychoses around crime, and alienation and targeting of certain minority groups within the rhetoric. So it created this negative political, social, economic psychology of phobias and paranoia. We hear it currently from people that we talk to and people that are talking. There was an attack on the democratic process, particularly the voting system, and accusations of fraud and sabotage and intimidation. You had an attack on the media and the free press and intellectualism and liberalism and progressive thoughts and ideologies. And especially the voter polls completely missed what was going on in the electorate and what was really going on in the election. The mainstream media polls had no clue what was going on. And Trump was telling them the whole time, the polls are wrong, well, the polls were wrong. He was right. You have cultural segregation, and you can really see it through news and media and other cultural aspects, such as really the difference between the broadcast stations. You have Fox News that was appealing to the conservative and really conservatives and really the constituencies. And then you had NPR that was really most popular for the coastal progressives and liberals. On the music scene, you could really see from the right and from the Republicans and the people who voted, they listened to more country music, while the coastal, more progressives, Democrats, hip hop and rock and roll. And these are all really important aspects associated with the formulation of the coalitions. And then lastly, you're going to have a judicial realignment. He's going to be able to pick probably 3 Supreme Court judges over his 4-year term, because 2 of them are in their late 80s and early 90s. And they're probably not going to make it through his term or his second term. So what was the immediate economic impact from the election outcomes? Well, you have multinational corporate uncertainty that's going on. Corporations are trying to figure out what the policy outcomes are going to be and then how to rearrange the corporate strategy to be able to take those policies into consideration. You had a shift up in the steepening of the yield curve. The 10-year Treasury is now over 2%, and the 30-year is almost 3%. Again, they're seeing higher inflation expectations, and they're seeing higher debt levels and deficits in the future. You saw depreciation of the peso, 13%, the rand, the South Korean kron, the dollar, and an appreciation of the yen and the euro. So a flight to safety and out of emerging markets that depend on global trade to grow their economies. You're seeing high stock market volatility. The Dow was down 800, then up 200, now it's up 250 points. And it hit circuit breakers yesterday for the first time in a long time. Gold is up due to fear. Oil is down because the perception of increased production and fracking, which means with gold going up, higher inflation expectations are being considered along, and that's also reflected in the shifting up of the yield curve. What are the future economic impacts? In the short run, it's going to be stimulative, but in the long run, it could be inflationary and actually be counterproductive. It'll probably work in the short run if its policies get enacted, but in the long run, it's just going to add a lot of debt and deficit, which will, as they're selling the bonds, bond prices will go down and interest rates will go up, and actually the economy will slow or stagnate over the long run. So the short-term fiscal stimulus for next year, and potentially 2018, if the policies are enacted, you'll see through lower taxes, you'll see higher consumption. This is just GDP. You'll have higher investment because of lower taxes and higher capital expenditures by businesses. You'll see more government spending, higher debt levels, less regulation, and you'll see a military buildup. Net exports will probably increase because of the devaluation of the dollar. Eventually the dollar will devalue. And you'll see higher import prices, which will be inflationary for us, which also puts upward pressure on interest rates. In the industry that will be impacted the most will be the auto industry, because they manufacture most of their components overseas and then import them and assemble the cars domestically. You'll have environmental degradation, because he doesn't believe in climate change. So you'll probably see more production of coal-burning plants and more carbon through the promotion of oil production and consumption. And if there's deregulation and they control the EPA, and there's more deregulation, you'll probably see more spills, air pollution, water contamination, and other factors. That will then spill over into probably health effects. Multinational corporate uncertainty. When companies are scared, they don't invest, right? So there'll be probably lower investment due to higher interest rates, which will drive up the cost of debt and equity for the firms. If the government is issuing trillions of dollars in new debt, that's going to crowd out private investment in equities and corporate bonds. Lower employment by corporations. Again, corporations don't hire when they don't know what's going on. Yes, certain industries will benefit, but other industries will be negatively impacted, and you'll probably see layoffs or less employment growth in those sectors. If corporations are uncertain, they're going to hold more retained earnings, more cash, which means less payout for dividends to their shareholders and less capital expenditures. They're going to hold large precautionary balances. And you'll see less reparations of earnings back into the United States. They will continue to hold a lot of cash balances offshore, and they will not reparate the money back and reinvest back in the United States. The impact will probably be the greatest on the West Coast: Seattle, Portland, Bay Area, Southern California, Tijuana, San Diego, probably the East Coast, New Jersey, New York, port cities, because as the global trade flows start to slow due to higher protectionism, those markets will be impacted the greatest. Fiscal policy, fiscal spending will be stimulative, but you'll see larger budget deficits and debt levels. We're already at 20 trillion in debt. I would probably double that in the next maybe 10 years if these policies are enacted. You're going to see infrastructure spending. I don't have the numbers on that, but I figure that's at least $250 to $500 billion in infrastructure spending. So obviously the construction industry will benefit. He's also talking about eliminating sequester, which basically means you have to cut something in the budget to pay for the military. He's going to get rid of that. And he's already talked about a military buildup, particularly in the South China Sea, rising troop levels, increasing production of ships. He's already saying he's going to build 70 ships, increased aircrafts, probably see more money coming down from the federal government to local law enforcement, required payments from NATO and other alliances. So he's asking for money from NATO, from Saudi Arabia, for Japan, for military protection. Eliminate sanctions on Russia, he's talked about that, which is counter to the Obama administration. And he's also talked about bringing back torture and waterboarding into the process. On the taxation side, will probably be accommodative and stimulative, but again, risking large budget deficits and higher debt levels. He's already talked about a reparation holiday of 10% right off the top of the $2 trillion in cash that multinational corporations are holding offshore. Corporate tax, he's talking about a corporate tax revolution to lower the corporate tax rate to 15% from 35%, and lowering the capital gains tax. And who knows what other tax rates he's going to cut. Well, that just means less tax revenues, higher budget deficits and higher debt. Because again, how are you going to fund it? These budget deficits, either you raise taxes, which he's not going to do, you got to basically issue more bonds. Okay? Which basically means that at some point in time, the amount of interest on those bonds will probably eat up the majority of the tax revenues. At some point, it's countercyclical. Regulation, deregulation is basically his proposal. First thing he's going to do is try to repeal Dodd-Frank and the Affordable Care Act. And Dodd-Frank was basically the legislation that was implemented after the financial crisis to keep the financial industry from conducting illegal and corrupt business practices. He's going to go after Obamacare, and again, you have mandates now. You have both the House and the Senate controlled by Republicans. You don't have to split House and Senate. You have basically the same party running all three branches of government, which makes it a lot easier to push legislation through very quickly and get it signed by the presidency. So the question will be, what's going to happen to the 22 million people that are currently on healthcare, on the Obamacare? And then what do you do with the other 30 million people that are outside the system? So a total of basically 50 million people at one time were completely, without healthcare. So we'll find out very quickly, because these are probably the two things they're going to do first. Repeal legislation on drug makers. Oversee the FDA, probably push through, reduce regulation on drugs being brought to the market, and probably food safety too, if you deregulate and relax food safety regulations. So what you really saw was really populism versus conservatism and liberalism. He also wants to eliminate, he wants to impose term limits on Congress, which Mitch McConnell's not going to go for. You have 6 million less voters this time around. Clinton basically got the West Coast, the coastal markets, highly educated, Latino, Black, urban, coastal votes, but that wasn't the majority of the population. Couldn't win the Electoral College. She could get the popular vote, but she couldn't get the Electoral College. And then to be able to move these policies through, you're going to need policy consensus at the end of the day. On climate change, he doesn't believe in climate change or global warming. So you'll probably see higher carbon emissions. You'll see a renegotiation of the Paris Accord, which Obama signed, Kyoto Treaty, probably won't see cap and trade, and you'll probably see a reversal of the tax credits for alternative renewable energy projects. Environmental deregulation, again, carbon, coal, oil, fracking, fuel production, those are all policies that he's promoting. Immigration, definitely anti-immigration. What do you do with the 11 million immigrants that are here illegally currently? Who do you keep? Who do you deport? That will be major legal and administrative issues. What's the cost of building the wall between Mexico and the United States? That's going to cost billions of dollars. And where's the money going to come from to fund and build the private prisons and deportation centers to basically, move these people out? He says he's just going to go after the people who have criminal records, but who knows what it's going to look like. Trade, overall, will be slowing and declining on a gross basis, particularly in China, Japan, Mexico, and Brazil, who import the majority of their exports into the United States. You'll see protectionist policies and renegotiations talked about with NAFTA between the United States and Canada and Mexico, Trans-Pacific Partnership, which is basically with Southeast Asia, particularly China. And then he's also talked about revoking the Iranian nuclear deal. He wants to onshore jobs, and he's already talked about a 45% tariff on Chinese imports, possibly imposing quotas. And again, the industry that'll probably get hurt the most is the auto industry, because the supply chains of parts that come directly from Mexico and Brazil and other parts of the world. He wants to crack down on overseas operations, so probably increase corporate audits will probably occur, and probably going after in the tax code transfer pricing, which is the most effective way of spreading out and reducing taxable income by multinational corporations, is through transfer pricing. For you as accounting majors, a lot of this stuff is really important for you because you'll be directly involved in a lot of this stuff. So the overall assessment is the policies are definitely stimulative. Their fiscal policy, monetary policy really hasn't worked very well. So you really need fiscal policy, but the question is, are these the fiscal policies that you want to stimulate the economy and pull people out of poverty? You'll see high budget deficits and debt levels, and definitely a crowding out from private investment. Trump platform result is significantly higher fiscal spending across a broad range of categories, some of which, particularly infrastructure spending, have historically had a significant impact on the overall U.S. economy. Military buildup has been really targeted to certain geographies across the United States, really targeted to specific industry. And personal and corporate policies, economically stimulative given the tax cuts. But if the tax cuts go to the upper echelon or the upper income groups, not the lower income groups that consume the majority of the tax cuts, which would stimulate the economy, the trickle-down economics and supply-side assumptions won't work in the end, and there will actually be some type of negative wealth effect at some point due to immigration policies, because you're not growing the population, you're not having higher employment participation or labor market participation. And if those people aren't working and you're not growing the population, you're not increasing aggregate demand over the long run. Is there anything that I'm missing? I have to do a presentation in 3 hours to go out to a group of family office portfolio managers. There'll probably be at least a couple $1 billion in the room. First thing they're going to want to know is this stuff, right? Because they're going to have to start reallocating the portfolios and start figuring out what their investment strategies are going to be going forward on behalf of the clients and the families that they're managing the wealth on behalf. Am I missing anything? I got feedback from the last 3 classes. They gave me little tidbits to be able to make some additions into the presentation, so I'm not missing anything.
How would it affect like the housing market?
That's a good point. You know, I didn't I've only had like 48 hours of that, or 24 hours, so I haven't had a lot of time to go through a lot of the literature and read the Financial Times and go online and start going through the different segments of the economy that would be impacted. I haven't heard anything, but if you're gonna see rising interest rates, that means mortgage interest rates are gonna go up. So the mortgage payments are gonna go up, which will push down affordability. It will probably slow the housing market, because mortgage rates are higher, so that means the cost of housing to buy a house will go up. So it could, I don't see the housing market, you know, taking a significant downturn very quickly, because it's still recovering from the last recovery, and interest rates are still relatively low. But if interest rates go up quickly and stay high, then eventually it'll trickle through to the housing market, and that will lower home sales, and then start having an impact on home prices. But there's no oversupply in the housing market. Right now there's actually shortages of housing. The question is, what will he do with Fannie Mae and Freddie Mac, which are the largest government sponsored institutions that actually support the mortgage market. I haven't heard about any type of housing policy adjustments or any institutional adjustments for Fannie Mae and Freddie Mac, which is what I'd be looking for.
Do you think this will overall speed up how quickly we get a recession or slow it down?
It would probably, if he can pass these things through Congress, which I believe that Democrats will cross the aisle for some of these policies, particularly tax cuts and infrastructure, it will probably take a year, and it will probably mitigate the potential slowdown in the economy, which is already occurring. But if you have huge debt levels that are accumulating at some point in time, is going to have an effect on government spending. So I think it'll be stimulative in the short run, maybe over the next 4 years, but maybe in the next 5 or 10 years, the debt levels are going to set in, and they're going to have to raise taxes or cut back on expenditures, which will slow the economy and probably send it into another recession. And that's why I'm going to stick with my 21 through 23 forecast on that. Anything I'm missing, or?
If he was gonna raise the tariffs to 45%.
This is just on the Chinese
Yeah,
imports.
so, well, Chinese import is a major,
I know,
like, in US
I know.
market, so it's
I know.
gonna cause a lot, like a big inflation
yeah,
on our pricing.
absolutely, absolutely.
So that kind
And
of
again, a lot of this
contradicts.
stuff is rhetoric, it hasn't been passed yet, but I'm just presenting what the policy recommendations were, you know, from his platform, that he basically won the election on. The question will be, is how he negotiates and what the reconciliation will be with the Republican Party, but they do control owned houses. So basically, the Democrats are shut out of the process because this is a majority rule democracy, a winner-take-all system. So if you control the House and the Senate, you control the presidency, you can push through policies fairly quickly. And I'm sure some of the Democrats will come over to the Republican side to pass some of this legislation because they'll benefit from it.
Do you think the tariffs will make up for the cutting of taxes?
Again, I don't know. A lot of the stuff I just don't know yet. I mean, this takes months to figure out. I was able to pull it together in 24 hours. It's gonna take me a long time to kind of figure out what the net effects are gonna be and what the impacts are gonna be. And the question is what corporations and industries and individuals are gonna benefit and get hurt from it. And if you're a portfolio manager, you have a fiduciary responsibility to conduct this analysis and figure that out, because you're overseeing maybe millions or hundreds of millions or billions of dollars worth of other people's money, and you're responsible for taking care of their money. And either you take advantage of it or you put in risk management policies. Am I missing anything? No? Okay, so let's do the memos. Pull out your memos.